Gold and silver just dropped sharply after the latest Federal Reserve meeting, and naturally, a lot of investors are asking the same question: is this the end for gold and silver? Or, is something else actually happening behind the scenes? Let's break it down. First, what just happened? After the Fed meeting, markets reacted quickly. Interest rates are expected to stay higher for longer, and that usually puts pressure on gold and silver. Why? Because precious metals don't pay interest. So when rates go up, investors often move money into assets that generate yield. That's why we saw this sudden drop. But here's what most people miss: this is not new. Gold and silver have gone through this cycle many times before. Every time the Fed tightens policy, metals often pull back in the short term, but over the long term, the bigger trend tells a completely different story. Now here's where it gets interesting. Despite the drop, the fundamentals for gold and silver haven't changed. In fact, in some ways, they've actually improved. Global debt is still at record highs. Inflation is still a long-term concern. Central banks around the world are still buying gold aggressively. So while short-term traders are reacting to the Fed, long-term investors are quietly watching for opportunity. Let's talk about psychology. When prices drop fast, fear takes over. You'll start seeing headlines like, "Gold is finished. Silver is collapsing. Bull run is over." But historically, these moments of fear often appear near short-term bottoms, not long-term tops. So, is this the end? Highly unlikely. What we're seeing right now looks more like a classic market reset. A shakeout. A moment where weak hands exit, and patient investors prepare. Now, let's flip the perspective. Instead of asking, "Why is gold falling?" a smarter question might be, what if this is an opportunity? Because markets don't move in straight lines. Even in strong bull markets, corrections are normal and necessary. They create the setups for the next move higher. And here's something important: if the Fed eventually pauses, or starts cutting rates in the future, that's historically been a strong catalyst for gold and silver. So ironically, the same Fed that caused this drop today, could be the reason metals rise tomorrow. So what should you do? Not financial advice, but a mindset shift. Don't panic during volatility. Don't chase hype at the top. And don't ignore opportunities during fear. Because the biggest gains often come from moments when the market feels uncertain. To sum it all up, yes, gold and silver dropped after the Fed meeting. Yes, short-term pressure is real. But no, this doesn't look like the end. If anything, this could be a setup for what comes next. The real question is not, is gold and silver over? It's, are you prepared for the next move? If you found this helpful, stay tuned, because the next move in gold and silver might surprise a lot of people.